we want to take a look at Cathie Wood's flagship ARK Innovation ETF. Now, of course, it's down about 40% this year, but there are some investors that are starting to look at it and maybe pile in. The fund is seeing its 5th straight week of inflows. Joining us now, our Bloomberg cross-asset reporter, Isabelle Lee. Who are these sort of inflows that we're seeing?
You know, it's very interesting because it's really hard to tell. You really can't tell with ETFs, but then we talked to a lot of sources and they say it's likely investors who basically don't want to miss on the historic rallies we've seen. If you recall, in March 2020, Cathie Wood's fund gained 150%. I mean, it's now down 40% as we know, but it's just the 3rd month of the year, so investors are really hoping for those massive gains, and they're just really piling on. And if you also know, it's been the 3rd straight month of people adding money, and so that's the longest streak in a year. So that really just tells you the conviction of Cathie Wood's fans and maybe Cathie Wood herself.
I know, but talk about that conviction, because dare I say it, that certainly some of the halo effect has been lost from her somewhat. I mean, the fact that she was bathed in glory, and that's kind of on the media. And now, of course, now the media is very quick to turn on you when suddenly your returns aren't quite so good.
That's kind of true. There have been a lot of reports that aren't the most positive about Cathie Wood, but then you can't really blame those reports because her fund is down. But then we're only in March. There's still 9 more months. And recall that the past 2 years, it's the best environment for retail investors.
There's a broader question here, though, about the effect of retail traders. And we've seen the inflows into ARK, and we've actually seen other funds where there seems to be evidence that the retail traders are willing to put more money to work in this volatile market, at least more so than what we've been seeing with regards to the institutional investors.
That's true, but then we've also seen a lot of data that shows that retail investors might be taking a back seat, and it's now institutional investors and hedge funds that are investing in the stock market. It's not the funnest thing to do to invest if the stock market is down. And right now, tech stocks in particular are suffering the most because of the high yield environment. We have the FOMC meeting next week, and they're going to probably hike interest rates. So a lot of retail investors are taking a backseat. Crypto is also down. I mean, those two kind of go hand in hand. So we'll see where the...
Are we still seeing those strong correlations between crypto and
ARK, you are? Well, on a day. We decide whether it's...
So crypto is behaving more as a risk asset now, so it's not, at least for now, functioning as the hedge that it touts itself.
You told me it was a store of value.
It is. It is digital gold, people. I can't understand why the rest of the world doesn't understand. No, and right now it's a risk asset.